ready to dive into the world of market wizards. We're about to uncover the secrets of traders who just seem to have this uncanny ability to consistently win in the market.
Yeah, it's funny you should say uncanny ability because it really is anything but. That's what's so fascinating about this book.
We're talking Jack Schwager's market wizards, right?
That's the one. He doesn't just talk about their winning trades, he gets into their heads. Their strategies, how they manage risk, how they deal with those gut-wrenching losses.
Because, let's face it, everyone wants to know the secret sauce, right? What makes these traders tick? What sets them apart?
And here's the thing. There isn't just one secret sauce. That's what's so cool about this book. You've got technical analysts glued to their charts. You've got guys who read intelligence reports like their stock chart.
Intelligence report.
Oh, yeah, we'll get to that. It's fascinating stuff. But the point is, there's no one-size-fits-all approach. And that's actually really encouraging.
Okay, so where do we even begin? This book is packed with trading legends.
Well, it's interesting because Schwager himself, he wasn't always this trading guru. In fact, he learned early on from a mentor, this guy named Michael Marcus.
Okay, mentorship, I like it. It's like a shortcut, right? Learning from someone who's already walked the path.
Exactly. And talk about a path. This guy, Marcus, he turned $30,000 into $80 million.
Okay, now that's what I'm talking about. That's the kind of magic we're looking for, right? From 30 grand to 80 mil, come on, what's the catch?
Well, it wasn't all sunshine and roses, that's for sure. He had some major setbacks along the way, like we're talking getting completely wiped out in the corn market.
Ouch. Even wizards make mistakes, huh? So what did he do? Did he just throw in the towel?
Not a chance.
Uh,
He actually said those losses were some of his greatest teachers. He learned the hard way about the importance of risk management, of cutting your losses short when you're wrong.
There's that saying, right? The first loss is the best loss, but easier said than done when you're staring at a sea of red on your screen.
Oh, tell me about it. But Marcus, he was all about riding the trends. He had this knack for spotting when a market was on the move, and he'd ride that wave until there were clear signs it was turning.
So it's not about trying to time the absolute top or bottom. It's about recognizing the momentum, the trend, and staying with it.
Exactly. Don't fight the current, ride the wave. Now, another trader who had this incredible knack for spotting trends was Richard Dennis. Get this. He started trading as a teenager.
As a teenager, seriously, he must have been a natural.
Well, it's funny. Dennis actually didn't believe in naturals. He thought trading success could be taught. So he created this experiment, the turtle trader experiment, where he tried to teach his trend-following system to a group of ordinary people.
Okay, I've heard of this. So he basically tried to create trading ninjas from scratch. Did it work?
That's the really interesting part. His students, they did achieve some incredible returns, but their trading styles varied wildly. Some were aggressive, some were more conservative, even with the same system.
So it's not just about the system itself, it's about the individual, their personality, their risk tolerance.
Exactly. And that's something that comes up again and again in the book, this idea that there's no one-size-fits-all approach. Now, speaking of unique approaches, let's talk about Larry Hite.
Okay, yeah. The screenwriter turned market wizard. How does that even happen?
Right. Talk about a career change.
Yep.
Hite, he was a successful screenwriter in Hollywood, but he realized that managing risk in filmmaking was actually very similar to managing risk in the markets.
So it's all about budgeting, whether you're making a movie or making a trade.
Precisely.
Right.
And he brought that same discipline to his trading. Now, on the other end of the spectrum, we have guys like Tom Baldwin who dove headfirst into the chaotic world of floor trading.
The trading floor. Now, that's what I call high pressure. What was his story?
Baldwin thrived in that environment. He actually said he loved the energy, the chaos. He saw opportunity where others saw volatility.
So it's all about perspective, right?
Yeah.
One person's chaos is another person's playground.
And Baldwin was definitely playing on that playground. Now, speaking of different perspectives, have you ever heard of a trader who credits his success to embracing fear?
Embracing fear. That sounds counterintuitive, to say the least. Most people try to avoid fear at all costs, especially in trading.
Exactly. But this guy, Mark Weinstein, he sees fear as his edge. He says the best traders are the ones who are most afraid of the market.
Okay, I'm listening. Tell me more about this fear as fuel approach.
Well, Weinstein, he believes that fear keeps him grounded, keeps him disciplined. It forces him to be incredibly selective in his trades and to always be aware of the risks.
So it's like having a healthy dose of paranoia, always looking over your shoulder, anticipating what could go wrong.
That's a great way to put it. He's not letting fear paralyze him. He's using it to sharpen his focus and make smarter decisions. It's funny how that fear thing, it's not just in trading, you know?
Right, right. I was just thinking that.
Like take athletes, right? Surgeons, they're at the top of their game, but they still have that edge of fear, that healthy respect for what they're doing.
It's what pushes them to prepare, to stay sharp, because the stakes are high.
Exactly. And that's where discipline comes in.
Yeah.
Because fear without discipline, that's a recipe for disaster.
Oh, yeah, like hitting the panic button every time the market dips. Not a good strategy.
Speaking of discipline, this guy Marty Schwartz, he's like the poster child for disciplined trading. He had this saying, losses are a cost of doing business.
Well, it's not about avoiding losses altogether. It's about accepting them as part of the game.
Exactly. And he had these really strict rules for himself, like cutting back his position size after a loss, never trading when he was emotional.
It's interesting you mentioned that emotional side because I've heard some traders talk about visualization, like actually picturing those successful trades.
It's almost like a form of mental rehearsal, right? And while not everyone buys into that, I think there's something to be said for the power of the mind in trading.
Definitely. It's about having that mental edge, that ability to stay calm and focused when the pressure's on. Now, we talked about trends earlier. What about those traders who take a more global view? Like they're looking at the whole chessboard. You mentioned Bruce Kovner earlier.
Oh, Kovner, he's a different breed. He's not just looking at charts and graphs. He's reading intelligence reports. He's studying history. He's trying to understand the big picture.
So it's like he's connecting the dots, seeing patterns that others might miss.
Exactly. And he's not afraid to make big bets when he sees those patterns forming, like his famous Canadian dollar trade. Everyone thought he was crazy.
What happened?
So the Canadian dollar, it was overvalued. Everyone knew it. But no one knew which way it was going to break. And then, boom, the U.S. and Canada announced this trade agreement.
Okay, so what did he do?
Most traders, they focused on the immediate impact of the deal. But Kovner, he saw it as a sign that the fundamentals had shifted. He went all in, shorting the Canadian dollar. He made a killing because he saw the bigger picture. He understood how this one event, this trade agreement, would ripple through the market. He was playing chess while everyone else was playing checkers.
That's incredible. Okay, so we've got the fear embracer, the discipline rule follower, and now the big picture geopolitical analyst. Who else we got? What other flavors of market wizards are out there?
Well, if you're talking about unique approaches, you got to talk about Ed Seykota. Remember I mentioned dreams earlier?
Yeah, the dream trader. How does that even work?
So Seykota, he believes that our dreams are our subconscious mind's way of processing information, including market data.
So he's literally dreaming up trading ideas.
Not exactly.
Huh.
But he pays attention to his dreams, looking for patterns, for insights that might give him an edge in the market.
Like a sixth sense for trading?
Something like that. And he's got some pretty wild stories about how his dreams have actually predicted market moves. Kind of creepy, but also kind of cool, right?
Okay, yeah, now I got to hear one of these stories. Give me the best one.
So one time, he had this dream about a silver airplane crashing. And guess what happened? The silver market tanked.
No way. That's wild. Okay, now I'm starting to think I need to pay more attention to my dreams. But seriously, is this guy for real?
Hey, they say whatever works. But I think the bigger point here is that Seykota is really in tune with his intuition, with those subtle signals that our conscious mind might miss.
So it's about being open to different ways of seeing the market, even if they seem a little out there.
Exactly. Now let's shift gears for a bit and talk about the trading floor again. We've talked about Tom Baldwin, but there's another trader, Brian Gelber, who has a really interesting story. He started out as a broker on the floor of the Chicago Board of Trade.
Okay, so he was in the thick of it, seeing all the action firsthand. What was his specialty?
He was advising clients on financial futures, which are basically contracts to buy or sell an asset at a set price on a future date.
So he was dealing with some serious money, serious stakes. What was his biggest takeaway from that experience? Oh,
He learned the hard way about the importance of patience and discipline.
which on a trading floor surrounded by all that energy, that can't be easy.
Right. It's so easy to get caught up in the moment, to make impulsive decisions based on emotion.
Oh, yeah. Fear of missing out, revenge trading, all that good stuff.
Exactly. But Gelber, he saw how often that led to disaster, both for himself and his clients. So he developed this incredible ability to control his impulses, to wait for the perfect setups.
So it's like being a sniper instead of a machine gunner. Pick your shots carefully, be patient.
Exactly. And what's really interesting? He actually found that stepping away from the floor, getting some distance from the chaos, actually improved his trading.
Really? You'd think being right there in the action would be an advantage.
It can be, but it can also be overwhelming. Sometimes you need that little bit of distance to see the forest for the trees.
To gain some perspective.
Exactly. He even said something like, the markets haven't been great, but I'm proud of myself for not losing money. Like he was proud of not trading, which is a big deal for a lot of traders.
It takes discipline to sit on your hands when everyone else is going crazy. It's like Warren Buffett said, the stock market is a device for transferring money from the impatient to the patient.
Couldn't have said it better myself. And speaking of patience and recognizing opportunities, let's circle back to Tom Baldwin for a sec. The guy was like a magnet for those big market moves, wasn't he?
Okay, yeah, Baldwin. He was the one who dove headfirst into the T-bond pit with, what was it, like 25 grand?
Yep, 25 grand, which in the world of bond trading is not a lot of money to play with. But he turned that into a fortune.
So what was his secret?
Baldwin was known for his aggressive style, his ability to handle massive positions. But he also had this incredible intuition for market timing. He just had a knack for spotting those inflection points, those moments when the market was about to make a big move.
So it's like he could feel the shift in the energy, the momentum building up.
And he wasn't afraid to act on it. When he had conviction in a trade, he went all in, no hesitation.
But even with that confidence, he must have had some losing trades, right? Everyone does. How did he handle those?
He had this interesting philosophy about losses. He believed in never giving up on a trade, even if it was going against him.
Wait, seriously? Isn't that like the cardinal sin of trading? Cut your losses short, right?
Exactly. But Baldwin, he saw it differently. He believed that if you've done your homework and you truly believe in a trade, you have to have the guts to stick with it, even if it means weathering some short-term pain. Of course, this is only if you really understand risk and position sizing.
So it's not about being stubborn, it's about having conviction in your analysis. But that takes serious confidence.
It does. And not everyone can handle that kind of pressure. But Baldwin, he thrived on it. Now, while we're talking about traders with unique approaches, we can't forget Tony Saliba. This guy was a legend in the options pits.
Okay, options. Now, those can be a bit of a head spinner. What was his deal?
Saliba, he was a master of spreads, especially the butterfly spread.
Okay, time out. You're going to have to break that down for me. What's a butterfly spread?
Imagine you're at a carnival, right? And there's that game where you have to guess which bucket the ball is going to land in. A butterfly spread is like hedging your bets. You're not just betting on one bucket, you're spreading your bets across multiple buckets. It limits your potential losses while still giving you the chance to win big.
So it's like playing it safe, but still leaving some room for a big payoff.
Exactly. And that was Saliba's genius. He wasn't looking for those home run trades. He was playing the long game, minimizing his risk and letting the profits take care of themselves.
Smart. And it paid off for him, especially during the '87 crash.
Yeah, while everyone else was panicking, Saliba saw an opportunity. He used his options expertise to capitalize on the market's volatility. The story is he made like $4 million in 72 hours.
Yeah, get out. Okay, now that's what I'm talking about. From underdog to top dog in just a few days. What a story. But it's not all about the money, is it? These traders, their lives are pretty intense.
Oh, yeah. And Saliba is really open about the toll that trading has taken on his personal life. The long hours, the stress, the constant pressure to perform.
It's like anything else, right? There's always a trade-off.
Exactly. And he's really honest about the fact that trading can become an addiction, even for the best. He's still working on finding that balance between his professional life and his personal life.
It's something we can all relate to, whether it's trading or any other demanding career. It's about finding that sweet spot where you can pursue your passions without letting it consume you.
Right. It's an ongoing journey, that's for sure. And speaking of journeys, we've covered a lot of ground here. What are some of the big takeaways that you think our listeners should remember?
You know, it's funny because when you think market wizard, you kind of picture, I don't know, like some dude with a crystal ball or some secret formula, right?
Right, like some kind of magic touch. But that's the thing, isn't it? It's not magic.
That's what's so inspiring about this book, though, right? These traders, they come from all walks of life.
Exactly. We have the screenwriter, the floor trader, even a guy who's using his dreams to make trading decisions.
Don't forget the guy who reads intelligence reports, like their stock charts.
Oh, yeah, Bruce Kovner. He's playing 4D chess out there.
Hmm.
But the point is, there's no single path to becoming a market wizard.
And so many of them, they talk about losses, right? Like, it's not about never losing because that's impossible.
It's inevitable, right? You're going to have losses. It's how you handle those losses that really separates the amateurs from the wizards.
Because it's easy to let those losses get to you, you know? Start second-guessing yourself, chasing your tail.
Oh, yeah. Revenge trading, that's a slippery slope.
Yeah.
But these guys, they've mastered their emotions. They have a plan. They stick to their plan.
Discipline. That seems to be the common thread, isn't it? No matter what system they're using.
It's like having a set of rules, a framework for making decisions, and then having the discipline to follow those rules, even when it's hard.
Even when your gut is telling you to do something else.
Especially then. Because our gut, let's face it, it's not always right.
But that's where the self-awareness comes in, right? Knowing your strengths, knowing your weaknesses, and knowing when to trust your gut and when to trust the system.
Exactly. And being willing to adapt, to learn from your mistakes.
Because the market's always changing, right? So you got to be able to change with it. Well, this has been an incredible deep dive. Really makes you think about your own approach, you know?
Absolutely. And I think that's the beauty of this book, right? It's not just about trading. It's about life.
It's about setting goals, managing risk, making decisions under pressure. Those are skills that apply to everything.
Exactly. Whether you're trading stocks or starting a business or just trying to navigate the ups and downs of everyday life, these principles, they're universal.
Well said. So, to our listeners, if you haven't already, definitely check out Market Wizards. It's a classic for a reason. And hey, who knows? Maybe you'll discover your own inner market wizard along the way. Until next time, happy trading, or should I say, happy lafing.